Hey traders, today is Wednesday, December 17th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the British pound. We do have the Bank of England interest rate decision on tap tomorrow. We just got the release of the updated CPI figures coming in softer than expected, a 3.2% clip on both headline and core, beating expectations for a 3.5% on headline and a 3.4% on core, all but solidifying tomorrow's rate cut. Markets are priced in well above 90% that the MPC will move to cut rates tomorrow. For the British pound, it looks like we're poised to snap a 3-week advance. We're more than 3.4% off of those November lows. That rally exhausting earlier today on a tag of resistance, 34.53 into 34.69. You're looking at the objective September high week reversal close. You're looking at the 618 retracement of that entire drop. Now, that's the weekly charts. Now, on the daily charts, it does look like we are sliding below the median line for this ascending formation we've been tracking off of last month's low. And we're now testing a break below the 200-day moving average. That comes in at 33.48. Watch today's close. But the objective break of the weekly opening range does leave the threat for a little bit deeper of a pullback in the British pound. Here's what it looks like on the intraday charts. We failed right at that 618 earlier today. This break constitutes a break of the objective weekly opening range low. The decline finding support at the 25% parallel. So we're looking to see what kind of reaction we get specifically into tomorrow's release. The next key lateral level of support comes in with the objective 38.2 retracement of the rally. You're looking at the November highs. That's 32.69 to 32.85. Note that the lower parallel converges on that over the next few days, and losses would need to be limited to this zone if sterling's going to maintain and continue to play within the confines of this November uptrend. Initial resistance is right at the weekly open, the June low. That gives you 33.72, 33.73. Watch for resistance there. If we are heading lower on this stretch, if we're going to go for a tag of key support, rallies should be limited to this zone. And again, we'd be looking for a larger inflection on a drop towards 32.80s on the downside. Initial resistance, like I said, the weekly open, that still holds at 33.72. You need to close above 34.53. That's 618 retracement to mark resumption of this multi-week uptrend. Next lateral levels on the upside, 35.27 is the objective October high. And then you run into the May and August highs and the September high day close near 35.93 and 36.25. Note that the upper parallel converges on that pretty much into the close of the year. That's going to be the next major resistance hurdle for the bulls if the British pound is going to make a move higher here. So we'll be watching to see what this rate decision looks like tomorrow. Remember, this is going to be the fourth rate cut this year. Last month's November read, you got a 5-4 vote count for a hold. So we are expecting another 5-4 count, but largely expected to be for a 25 basis point cut. We'll be looking to update you on all of that data and more tomorrow on X at MB4X. Till then, best of luck trading, and we'll see you tomorrow. Cheers.